Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me on, Jim.
Ross, with the Liberals returning with a minority government in Canada's latest election, promises made in the election on housing have been many. What kind of outcomes do you see from this if the minority government works out?
Well, I think that what we're going to see is the outcomes of these policies show up in the housing market. They will be misrepresented to the consumers in any manner possible in order to facilitate commission earnings by real estate brokers across this country. That's what I think is going to be the outcome of our election. I think, Jim, that my understanding is I would have been saying the same thing regardless whoever was elected. The policies, if they're enacted as laid out in this election, will simply result in short-term confusion from organized real estate who uses them as tools to try to make more sales. That's what I think is going to happen. Yesterday, we've got a Liberal minority, and we have it with a NDP backing available in the House. So I think what we'll see, Jim, is we will see the Liberal policies enact. So for the listeners today, I'm going to focus solely on one of the items the Liberals were committing to during the election, because I fully believe that this will be an enacted policy. And this also comes in the heels, Jim, of watching a BNN Bloomberg interview today with Benjamin Tall from the CIBC Bank, chief economist Benny Tall, as they like to call him now. He's become sort of a cult status economist with the newscasters during this housing run-up. But the fact that he's on the show and he's stating things that are absolutely ludicrous, as if he believes them to be fact, is really what the outcome of this election is going to reveal. So what he said today was, he was being questioned about the greater economy, and of course the sales pitch that the Canadian banks are using right now is the only way we will head into a recession is if there's not a trade deal between the United States and China. That's the sales pitch they're using now. Your listeners have got to remember, anytime you hear a chief economist from someone who lends money speaking, all they're doing is trying to spin something so that their bank or their company can earn money. What he said today was this. He said the $420 million committed by the Liberal government to allow first-time homebuyers to purchase homes with a 10% equity shared mortgage only represent 0.03% of mortgage originations in Canada. And they refer to it as peanuts. And I had a few thoughts about that as he was stating. First, I got my calculator out very quickly because I've never heard the term that this originations and a percentage quoted. And I did a quick calculation, and it proved to me he has no idea what originations are. He clearly was not measuring originations when he stated that percentage, because it is a false number. The data does not show that. Then he went on to say about how this wasn't going to impact the market because that it was such a small percent of mortgage originations. And we're sitting here and we're thinking, you really don't understand how organized real estate has conned the world of home buyers. They've conned you economists. They've conned the government, the same as we talked about on last week's show. So let me explain to your listeners what is a probable outcome from the Liberals being elected and offering a 10% shared equity loan. When a first-time buyer gets an opportunity to leverage their incomes by an extra 10% without paying any extra money per month, they increase that leverage. If a first-time buyer was going to spend $100,000, but the government said, we'll allow you to spend $110,000, making the same payment, those first-time buyers will spend $110,000. They will go out into the marketplace and they will purchase a $110,000 home. They're not going to look at the $100,000 home any longer. They're going to look at the $110,000 home. Organized real estate, of course, reports that as a 10% house price increase, because organized real estate only ever measures buyers. They never measure homes. The benchmark price is a fraud. That's why it mirrors average selling price, average purchase price from 2005 when it was created until today. It's the identical number. That $10,000 increase, buying a $10,000 more expensive home, will raise the average selling price of first-time buyers by 10%, going from 100 to 110. Organized real estate will brag about that. Now here's where Benny Tall is clueless to the impact it has on the overall housing market, because it's not as innocent as it looks. That owner of the $110,000 house is now going out to buy their next house. It's not the owner of the $100,000 house that is leveraging that $100,000 sale. It's the owner of a $110,000 house who is going to leverage his home equity the exact same way the owner of the $100,000 house would have done so. Let's say on your first trade, you're going to leverage your equity on a ratio of 3-to-1. That means that extra $10,000 on the next trade gets leveraged into $40,000. On the trade after that, let's say that home buyer is only going to leverage 2-to-1. That means the $40,000 more money that was spent via leverage on the second trade becomes $80,000. What we have in the process is an average increase of $40,000 between those three trades. Benny Tall, is only looking at the first trade. And because he doesn't know how the home trading infrastructure works, because he doesn't know how real estate stocks are created, he believes it's only going to be a $10,000 change. When in reality, even in this simple example that I've given here, the listeners can see the average would have been $40,000, or 4 times what Benny Tall said on Bloomberg today, because Benny Tall is ignorant to how the housing market functions. Organized real estate will report that as a $40,000 gain in this case. Everyone will believe them. Economists will believe them. Your neighbors will believe them. The next home buyer to come down the road will believe them. That's how house price illusion works. What this election did was the following. It unlocked the potential for short-term manipulation of Canadian homebuyers by organized real estate and the organized lending infrastructure that exists in Canada. That means your banks, your trust companies, your private lenders, your mortgage brokers. All of these people are operating under the premise that $40,000 gain is real. When we've just explained they're not buying the same homes that they would have before that initial 10% boost was provided in leverage to the very first buyer in the sales chain. What your listeners need to understand or take from this, Jim, is there are times in a housing market when you should feel comfortable making a decision, and then there are times when you should not. There are times in a housing market where the leverage being exuded on the market at that moment is normal leverage. It's really not going to impact your long-term financial outlook by owning a home. But on many other stages or times, the impact is going to be greater because you're going to carry this forward with you for the next 25, 30, 40 years that you own a home. And let me explain this to your listeners. If you had purchased a home at the start of this cycle in 2013 in Ontario, you would have spent around $390,000. That's what the average home buyer, the aggregate group of home buyers who were active in the market at that time, were spending $390,000. The homes that they were buying, the owners of those homes had gained $144,000 in the last 25 years that they owned it. In order for the same ratio to move forward, the homes that were being purchased for $390,000 in May in 2013 would have to have been worth $1.1 million 25 years from now, or in 2038, $1.1 million in 2038. So if you had entered the market at that time, it is possible that a house could reach $1.1 million. That the same house that was being purchased then could be worth $1.1 million 25 years from now. It is possible. Now, I will say it's only possible if interest rates can fall for the next 25 years, as they have for the previous 25 years, which we also know is not possible when you're down at 3% 5-year mortgage rate. But that said, as of today, the average home buyer in Ontario is spending about $590,000. And the owner of that home has profited only $158,000 over the last 25 years. So in other words, folks, the $200,000 more that home buyers are spending on houses today in Ontario versus 2013 has only resulted in the average homeowner getting the exact same amount of money after owning it for 25 years. There has never been a better example of how timing a market works than right now in the province of Ontario. Home prices, the average home buyer in Ontario is spending $200,000 more than they were in 2013. Yet the owners of the homes that they are buying have made no extra money. They're still sitting there at $155,000 gain over the last 25 years. This is what is going to happen because of the election. Organized real estate, instead of telling home buyers the truth about housing markets, how housing markets work, how your house price is going to increase in value over time, what it's going to cost you to maintain the value of your home in the housing stock, and not only that your home is going to be cyclical during that period of time, and because they don't have the knowledge to explain that even though your house may only obtain a certain rate of return over the next 25 years, you practically live there rent free for those 25 years is the only reason you needed to buy the home in the first place is never talked about. The reason it's never talked about is this. At a 5% commission rate on a $600,000 sale, you're talking $30,000 in commission that a real estate agents, the realtors in Ontario would be getting to sell that home. 30%, $30,000 on a $155,000 gain. The realtors are looking to take 20% of your gain over the last 25 years owning that home. There is not a single rational consumer in Canada who would agree to pay their realtor a 20% of their profits because the realtor has lied to them for the last 25 years about the housing market. It wouldn't happen. What you're going to see is organized real estate use this little tiny window to try to manipulate the public. They're going to be on it immediately. You're going to see them on it today. You are going to next, at the start of November, when stats come out, you're going to hear a whole bunch of stories. You're going to hear how the housing market was not as busy in October as we thought because it was an election. Home buyers sat in the sidelines waiting to see what the results of an election are. This is all hogwash. It's nonsense. There's nobody who sold their house in September who did not go out and buy another house in October. They're not sitting there homeless waiting for the results of an election. The housing market is so slow at the present time. The only people that are moving are people who pretty much have to move. These are not people who are moving by preference per se, but more because they have to. The results of this election will be quite simple. The public, once again, will be manipulated because they don't know how a housing market works, and because of the last 40 years, 70 years of organized real estate fooling them so that they can take that 20% of the gain those families made owning their homes over 25 years. That, folks, is the result of today's election.
We'll have more with Ross Kay right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Ross Kay. Ross, a listener from Alberta, asked about them buying a home and not being informed by their realtor of unpermitted work being done to the house. They're wondering, how can realtors still get away with these kind of deceptions?
How can they get away with these deceptions? They get away from these deceptions the same way as in our last segment. They're able to get away with conning you about house price gain. How they're able to take 20% of a family's gain on their home's value over the last 25 years and smile and get away with it. They do it because the public generally has no knowledge of what is required legally by the courts of law in the province that they're buying a home in. So in Alberta, depending upon how you structure your home purchase, the type of realtors that you're employing, the contracts that you're signing will dictate whether or not you have a right to sue the realtor or at the minimal, get all your real estate commissions returned. I can tell your listeners, it is almost impossible for a realtor today to transact a sale or a purchase and not have me find enough mistakes in their methodology to have the commissions rebated for it. It would be so unusual. It would be so rare that I would see a transaction handled in a manner that is 100% legally compliant that I'm going to say that any single transaction you showed me, I could get you your commissions returned. In Alberta, unpermitted work done in a basement, if you had a buyer's representative working for you, they are required by law to have attempted to document that work. If that work was not completed, was not permitted, and your real estate broker did not inform you of that prior to purchase, you should get your commissions returned to you. Every single penny that was paid to that brokerage should be returned to you. And that's only the start, because you also have the ability to sue that realtor, and you will win. If the listing realtor had the home listed for sale, and on the MLS listing, they included work on that listing, but they didn't state that it was unpermitted, they too will be held accountable for making a mistake. They too should fully refund you their commission portion that they've received. Now, how are these deceptions going on? Why does the public not know about them? Because organized real estate does everything it can to protect its members. There is no article of incorporation of any trade association in real estate or real estate MLS system in Canada that requires the trade association or MLS system to represent the interest of any consumer. Zero. None exists. It does not happen. They pretend that to be the case. I watched the lies told by organized real estate across this country in the news, reported every week, with smiling faces of board CEOs of the trade associations, sitting there lying to the public through leaving things out of their conversation. And I can understand why the public is so confused, because they keep everything hidden from you, the same way they keep why the MLS Cooperative Listing Service house price pyramid scheme is how real estate agents get paid their commissions. The public would never put up with it if they understood that's what's going on. This person from Alberta, if you purchased a home that involved at least one realtor, if it was two, you're even better off, and there was unpermitted work done to a home and it wasn't disclosed to you somewhere along the line, the realtors and only the realtors are responsible. You see, the listing realtor is required by law and case law in the province of Alberta to have done their due diligence, that even if an owner of a home had told them the work was permitted, they needed to check on that permit to see if those permits were true. The buyer rep cannot take the seller rep's word for it, because the contract they have signed with you is that they will do their basic minimum level of due diligence, which any rational Canadian would say was to check the permits. Can you imagine spending $500,000 and not checking the permit? Can you imagine being a realtor, earning $10,000, $20,000, $30,000 in commission and not respecting your client enough to simply check a permit? We checked permits from 1988 forward. What that means is the thousands of families who we represented on the buying or selling of a home, we always checked the permits before we opened their mouths. We did that because there was a case in Ontario in 1987 that held the realtor responsible for not checking the permit. If you asked any home buyer in Ontario today about their rights, they would have no idea what I just said, because organized real estate goes to extreme depths to keep these things hidden from the public. It's why women are allowed to get in cars with convicted sex offenders in the province of Ontario, because the regulator does not demand those women are informed of what's going on. It's nonsense. It's hogwash. It is how organized real estate works. It is not how organized real estate used to work in the 1980s. It isn't how it used to work in the early 1990s. Something has happened that has been tragic to the business over the last 20 years. And it's reached the stage where it is today, where this listener even has to ask this question. How is it possible in Canada today, in our computerized world, where Google can give me an answer to anything at the touch of my fingertips, This home buyer did not know whether or not their realtor had to disclose unpermitted work done to a home that they purchased. Why? Because you are inundated with home buyer guides that hide it from you. The first 10 pages or more of a Google search is inundated with hundreds and hundreds and hundreds of guides or reports that don't ever mention it. It's buried. It's hidden. It's kept secret. But you have a solution. The solution is important for all your listeners. Call your lawyer. Lawyers love this stuff. If you were smart enough not to pick a real estate lawyer who was buddies with the real estate brokerage community, because the real estate brokerage community funds their business by keeping them getting deals, you're going to get the truthful answer. And most lawyers are not those lawyers. There's only a couple of them in each municipality across this country. Most lawyers will look at you and say, well, of course the realtor had to check the permits. Let's sit down and we'll write up a complaint.
We'll have more with Ross Kay right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, the listener, asked us, now that home prices have dropped, is it a good time to become a real estate investor?
Well, a good time to become a real estate investor. I think we talked about this at a couple of shows ago, Jim, about how you determine whether or not a house is even investable at all. But let's focus a little more today on timing. Because you said, is it a good time to be a real estate investor? Every day is a great day to be a real estate investor. So don't let me pretend otherwise. It's just that there are way better days than other days to be a real estate investor. And timing the market is of utmost importance. In the first section of today's show, we discussed the Ontario housing market and where prices have gone and what's possible with house price manipulation by organized real estate. We said in that segment, if you go back and listen to it, that housing prices in Ontario have increased $200,000 in this cycle. So from 2013 to 2019, they're up. Home buyers are spending $200,000 more, but the average home seller who's owned their home for 25 years is getting the exact same $155,000 profit. No more, no less. Now, you can imagine the windfall that people who held on to their homes entered the market 5 years earlier. So in other words, they purchased their home 30 years ago instead of 25 years ago, because those people are not $155,000 richer. They're $355,000 richer. They've made that full $200,000 extra amount on their home that home buyers are paying because they timed the market or they got lucky. And I know in all cases from those old days, that would have been luck. We didn't exist back then. There was no wealthy homeowner back then. There was no Ross K Realty Consultants back then. I was a lowly, simple sales rep selling houses proudly as a sales representative, with everybody knowing my job was to sell houses. But if we did exist and investors had listened to us, they would have not saw a $155,000 gain. They would have saw a $355,000 gain. Almost 3 times. Well, I guess double. Excuse me. More than double. 2.5 times. Like, real estate investors need to look at the market from this perspective. There is the aggregated income that you're going to earn from your real estate investment the length of time that you own it. Then there is the potential gain on the value over the home of that home over the time that you own it. The type of home that you're buying will also determine the 25-year carrying costs associated with that home, because that's going to eat away at your profit. If you're a flipper, if you could have gained that $200,000, because home buyers are now paying $200,000 more in Ontario than they were in 2013, by simply staggering your purchase by 5 years. The problem everyone has is to give someone the advice not to buy a home for 1 year, 2 years, 3 years, 4 years, 5 years means that the real estate agents don't make any money. There has never been an opportunity for anyone to get this kind of advice ever. I'm sitting here with hard data that anyone can go back and check themselves about the province of Ontario that shows you, by timing the market, that simple 5-year window, you turn a $155,000 25-year gain into a $355,000 25-year gain. Your return on your investment is 2.5 times better. So, is it a good time to become a real estate to be a real estate investor? Yes. Are you prepared to look at what ownership window? How long are you going to hold on to the property? What kind of price point returns are you expecting to get? Are you looking at this as an income, or are you looking at this as a hold and sell 10, 20 years from now? All of those things are the questions that you have to be asked. You have to work through the process yourself. Once you work through the process and you decide what you're going to invest in, then you need to have the metrics you need to use to make the right decision on which home to buy. It's very, very simple. It's so simple, anyone can do it. You simply need to hear the truth about investing in real estate the same way that home buyers need to hear it about owning a home. You need to hear the truth. Get the facts laid out in front of you, and then you, and you alone, make a rational decision. The decision cannot simply be so that someone somewhere earns a commission today, or someone somewhere earns a sale 6 months from now, because you're going to own that rental real estate for decades. It's possible you're going to hand it down to your kids. Is it a good time to be a real estate investor? It's always a good time to be a real estate investor, as long as you're a real estate investor who times the market and understands what they're doing when they enter that investment decision.
Ross, thank you so much for chatting with us.
Thanks for having me on, Jim.
My guest has been homeownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross or anybody else on our show, you can send them to info@housestreet.com. Our popular YouTube channel is Talk Digital Network. Find us on Twitter @HouseStreet. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.